Hey there traders, today we're going to be talking about the calendar spread on today's How to Trade Stocks and Options podcast. This is the How to Trade Stocks and Options podcast brought to you by 10MinuteStockTrader.com, where we give you the tools, tips, and tricks to help you trade faster and trade smarter. And here's your host, voted one of the top 100 people in finance by Redwood Media Group, founder and head trader of 10MinuteStockTrader.com, Christopher Uhl. The How to Trade Stocks and Options podcast is produced in partnership with my friends at FinClub.ai. I use the artificial intelligence data from FinClub as my primary indicator. I don't even take a trade if FinClub doesn't show me that I have a greater edge than any other traders in the market. You've heard the stats, 90% of traders fail, which is why you need to find an edge, and FinClub has that edge for you for just a few dollars a day. The returns produced by FinClub have been shown to be more than double that of the market, with win rates as high as 90%. I mean, they basically make it so easy. They're going to show you exactly what stock is going to exactly what price. Basically, they're handing everything you need to you on a silver platter. Listen, they are so confident that this will change the way you trade. FinClub.ai is going to give you 2 full weeks to test drive their service, and they'll even give you all their historical results so you can see exactly how it works and how it can dramatically change the way you trade. And that's exactly what I've done. So head on over to FinClub.ai to start your free 2-week trial, and I'll even throw in some extra bonuses after you sign up. Now, the only place you can get your discounts and free bonuses is at FinClub.ai. That's FinClub.ai.
Now, the calendar spread is a neutral strategy that you can kind of play around a lot with this trade. I do like to have this on in my portfolio, and I like to use it in several different ways. The reason I'm starting with it in a neutral position is because on the outset, the way that I trade this is to sell a call in the front month or put, sell call or put in the front month, and then buy a call or put in the same strike in the back month. So what do I mean by that? Let's say this is the 100 strike here. And in the front month, I'm going to sell that. In the back month, I'm going to buy it. And that is the calendar spread. You're selling and buying the same strike between 2 periods. And it doesn't necessarily have to be on month to month, but it does have to be across periods. Now, this trade, as it says here, is somewhat undefined. And the reason it's somewhat undefined is because the prices can vary between the two. So for example, we're selling the front month. Let's say we sell a front month call for 50 cents. And then we're going to buy a back month call for $1.50, just for example here. Now, our max risk in the trade is limited to $100 because we have taken in $50 in credit and we had to pay $150 to enter the back month of the trade. So our max risk is limited to $100. Now I say the profit is somewhat undefined, and that's because we know for sure the max profit in the front month is $50. But if implied volatility expands, this back month option that we sold may go up in value. So while we know the front month is limited to $50, the back month is somewhat variable. And maybe let's give it $10 here, just for example. So in this particular example, our profit could be as much as $60. And that's when the front month expires worthless and the back month increases in value. Now, I like to use this trade, and unfortunately it is somewhat undefined on the profit. But we have an idea of what it's going to be. We know for sure the max profit we can get in the front month is what we sold it for, but we don't necessarily know how much the back month is going to be. The max risk in the trade, like I mentioned earlier, is the debit paid. Now, the ideal setup is low implied volatility rank. And I know you're thinking to yourself, well, low implied volatility, I'm selling the front month. That's not awesome. You're right, it's not. Because if it were high implied volatility, maybe you could have sold it for 75 cents. But the point of this is to be able to take advantage of the back month increasing in value. So maybe it goes from $1.50 to $3, right? And maybe this expands as well. But because this is so much shorter in duration, it's not going to expand as much. Like let's say they both double, right? So let's say the put we sold went from 50 cents to $100. That means we're out $50 in the front month. But if the back month went up $150, the trade would profit still by $100 because it went from $150 to $3, and the front month actually increased in value, but we sold it by $50. So the point is, we want to take advantage of low implied volatility. And most of the time, you'll be able to find the low implied volatility. Low implied volatility setups are more frequent than high probabilities or high volatility setups. Excuse me. Now the break-even points are somewhat undefined as well, and you'll see that that's kind of the theme here is somewhat undefined. Like I say, we have an idea of where things go inside your broker platform, which is where I took this from. It's going to give you an idea of where the price will end up, and it may fluctuate, give or take some, but it's not a perfect formula that I can give you today. However, I said earlier this is a neutral strategy, but you can play with this a lot. Let's say we're currently at 100. You could maybe buy a calendar at 98 if you're bearish, or maybe you could buy a calendar at 105 if you're bullish. And the way the risk profile would look is if it goes up to 105, then it's going to increase in value up to that point. So that'd be a great bullish trade. Or same thing with the bearish trade at 98. It would increase in value up to the 98. But, the traditional setup is at the money for a neutral trade. Somewhat similar to a iron butterfly, but everything is across 2 months instead of being within 1 month.
So there you go. That's everything you're going to need to know about how to trade the calendar spread. And before you go, make sure you head on over to 10minutestocktrader.com/free-training to take the free training there, where we talk about number 1, stock hacking, how to get 20 times greater risk or 20 times greater return with 20 times less risk. Number 2, how we use artificial intelligence to let the trades come to us. And number 3, my number 1 trading strategy that you can absolutely use with the calendar spread. So there you go. That's everything you need to know. Make sure you like, subscribe, and enable notifications. That way you never miss any of the tools, tips, and tricks that we upload every single week to help you trade faster and trade smarter. And I'll see you on the next episode. Hey, thank you so much for listening. And before you go, remember to head on over to finclub.ai to get your 2 free weeks of artificial intelligence stock picks. You've got nothing to lose and only the most advanced AI to help you trade with confidence at finclub.ai. That's finclub.ai. 10minutestocktrader.com content is for information and educational purposes only. It is not, nor is it intended to be, trading or investment advice or recommendation that any security, futures contract, options contract, transaction, or other financial instrument or strategy is suitable for any person. Trading securities can involve high risk and the potential for total loss of any funds invested. 10minutestocktrader.com and Christopher Uhl, through its content, financial programming, or otherwise, does not provide investment or financial advice or make investment recommendations. Investment information provided may not be suitable for all investors and is provided without respect to the individual investors and audience's financial sophistication, financial situation, investing time horizon, or risk tolerance. 10minutestocktrader.com and Christopher Uhl are not in the business of trading securities trades, nor does it direct client commodity accounts or give commodity trading advice tailored to any particular client situation or investment objectives. 10minutestocktrader.com and Christopher Uhl are not licensed financial advisors, registered investment advisors, or registered broker-dealers. Stocks, options, futures options, and other financial instruments not included here involve risk and are not suitable for all investors. You alone are responsible for making your investment and financial trading decisions, and for evaluating the merits and risks associated with the use of any financial security and broker platform. For more information, please visit 10minutestocktrader.com/legal. And thanks for stopping by.